Good morning. Can you all hear me loud and clear? Give me a one if you can, or anything in the text chat if you would. All right, awesome. Thank you. Welcome, everybody to the Trading Coaches Playbook. My name is Tony Benson. I'll be your guide for a little while. We're going to have a little bit of fun like we usually do. Hey, Brenda, how you doing? How's it going, Will? Which one was that? Beaky, B-E-K. I saw you said that was good, huh? Hopefully you're out of it by now. I saw it's been getting beat up the last few days. Anyway, yeah, happy Halloween. Hope you're all doing well. Everybody ready for Halloween? Anybody got little kids or taking out trick-or-treating? I've got one left. My daughter's 11, which is kind of pushing. I think I was 12 when I got cut off, when I couldn't go anymore. So my son's 15, so he's too old. But that's hilarious. I wish I could go. I couldn't get away with it. Not where I live. They were like, aren't you a little big? I went last year with it all dressed up in a costume, and I've got this costume I've had for years that people just love. They crack up at. So Scooby-Doo. The new one or the old one? The old one from the 70s or 80s. I don't know when that came out, but I watched it as a kid. So, well, it's good. A disclaimer out of the way there. You can see it on the screen there. We're not registered broker-dealers and investment advisors. I will not give you any recommendations or advice. Everything we do here is purely for educational purposes. If we do talk about a trade or mention a trade, just assume that it is a paper or a practice trade. For regulatory reasons, we do not discuss funded trading. So I don't like that sound. Not that one. Hang on just a sec. No, I just got stopped out. Oh, well, yeah, not a good stopped out, but not bad either. It doesn't matter. I lost a few bucks is all. It was just a little tiny trade, so no big deal. So here's what's coming up in the next week or two. Patterns in Flash with yours truly. If you haven't experienced that yet, I would suggest at least give it a trial. You get, as you know, with pretty much all of our stuff, you get a free 2-week trial. So that is the tool that I created years ago. That is all about patterns, how to recognize them, how to trade them, what to look for, and a whole bunch of pretty much everything technical analysis. Everything you need to know from a technical analysis standpoint is in there. There's over 8 hours of on-demand video. And then twice a month, we do as you can see there, we do a 1-hour class just like this. It's exclusively for subscribers to Patterns of Flash. So you get 2 hours live with me. Once a week, I do a pattern of the week, which should be, yeah, you should have gotten that already. But once a week, I do a pattern of the week. And lately, I've been doing 2 or 3. So usually, at least once a week, you're going to get a video that shows you 1 or 2 or 3 different potential trades. So, and you can go in, it's all on demand right in through the site. I don't know how many of you haven't seen it. I think I'm trying to see it here on where my main screen is. Oh, well, I won't worry about it right now, but yeah, that's coming up next week. November 3rd, we'll do that. And then the 17th as well. So 2 next month. So if you want, that is, oh, that's messing me up on there. Always having some little glitch. Nice things that just go smoothly, right? When do they though? So twice a month we do that. So again, you can, if you want to come out for another hour with me next week, jump on the free trial. And if you decide it's not for you, then just cancel it. It's no big deal. So some people love it. Some people hate it. I'm trying to get in to just give you a quick snapshot of what it looks like. I'll finish this stuff while that's going. Trade you is twice a month for those of you that are in that. So November 10th and 29th. Inner Circle is November 11th, 8 to 10. It's 2 hours. Monster Market Movers is November 18th. And then Mastering the Trade is November 22nd. Those are our premium online workshops, or tools, should say. The free online workshops, Power Hour, Trading Coaches Playbook, this one, right, next week, every Friday. Crush Your Trading in 2 hours. I believe that's with Rob on November 2nd, right? And then Covered Calls, Uncovered. And then Power Option Plays is Tuesday and Saturday. As you know, Covered Call Explorer is on Saturday. E-Mini Think Tank with Brandon is 3 days a week there, Monday, Wednesday, Friday. or Monday, Wednesday, Thursday, excuse me, 9 to 11, 2 hours. So thank you, Amy. And Amy dropped the link in there. So if you are interested, let me just show you real quick. Here's what I would suggest. If you haven't experienced this yet, get into it, and what you'll see. So these are just flashcards. All right, y'all use flashcards. You'll know what a flashcard is. It's just basically training your eyes to recognize patterns. And then you see here's the pattern of the week. So there's the last 6 or 8 weeks there. There's a risk reward calculator, which I'll use in here most likely. Bonus videos. Here's the videos, which are, this is where there's about 8 hours with the bonus videos. There's about 8 hours of video. And this is all about patterns. Here's the basics of technical analysis, and then each individual pattern that you'll see in there. Here's the monthly video. So the live classes that we do twice a week is also recorded and then posted in here. So if you can't make it live to those, you can go watch the recording. Here's what I'd suggest you do, and this is the only reason I brought it up. If you're newer to technical analysis, or if you're not sure where your technical analysis skills land, or where you're at, or how much you know, where your knowledge level is, go in and take these quizzes. Get the trial, go in and do the quizzes. There's 4 different quizzes. Basics of trends. These are 4 different sections inside the videos. And take each of these quizzes and see how you do. And if you ace every one of them, yeah, you probably don't need this tool. If you don't, then you may want to keep it. So totally up to you. That is it for that. We'll go, and then obviously you can find wealth builders on all the different social media. That's what I was trying to think of. And if you have, just real quick before I forget to say it, if you do have something you want to look at, what we'll do is I've got just a short PowerPoint. I'll go through. We'll talk about some of the emotional challenges of trading, as you maybe have experienced. If you have not, then I'm going to guess that you maybe haven't funded trades yet, or you're just practice trading still, which is fine. It's the old saying. What is it? I think it was Steve Nissen that said, what was it? Not practice trade, but when you're not in a trade, you're in the driver's seat. Once you pull the trigger and you fund a trade, you are no longer in the driver's seat. You are merely a passenger. Which I think is a great quote, because have you ever had that kind of out-of-body experience where you've watched the trade, then you finally pull the trigger, you get into it, and all of a sudden your mind, you just lose your mind and you can't think straight, or you do something stupid, get out of a trade when you shouldn't, you make a decision based on your emotions, and then after the fact, once the emotions settle, what was I thinking, right? So we have to be aware that that's what happens to us. And it's I don't know a single person that's never experienced it. So I love that quote, where you're not in the driver's seat anymore, you're a passenger. And what I think is important to do is learn to be able to sit in that passenger seat and give advice to the person in the driver's seat, which is also you, right? So you're in both positions. You're in the driver's seat, but you have to be able to look and reflect on yourself and see what you're doing, and be able to stay in that place and manage your emotions in a way that you can stay calm and not freak out, and be able to still make a good decision, right? So like right now, I got stopped out. I should have stayed in. I'm just kidding. I shouldn't have stayed in, because that would be breaking my plan. That's not good, right? That's why I don't care that I got stopped out. I lost 16 bucks. Don't care. It was only a small trade anyway, because I was legging into the position. So I'm perfectly happy with that. It was a good trade. I had a plan. I followed the plan. I'm out. Lost 16 bucks. Whoop-de-doo. I can't go to McDonald's today. I don't go to McDonald's, rarely. And if I do, now it's more than 16 bucks. In the old days, it was 16 bucks for a whole family. Now it's 16 bucks for one person. Anyway, we'll talk about inflation. The Dollar Tree, right? It's now going to be, they're going to rename it to the inflated Dollar Tree. That's what I've heard. Got out of Baba too early. But if you have questions about anything, whether it's, especially if it's about what we're talking about here, as far as the emotional side, managing your emotions, or if you have specific stocks you want to look at, we'll go look at charts. If you know me, I see a lot of familiar names here. That's what I love doing, is analyzing charts. And realistically though, and this is one thing I've said many times, is charts are nothing more than a visual representation of the underlying emotion of the traders for that particular stock or overall market, whatever it is. So it's like the superficial look. The chart is the superficial view of what people are feeling. So yeah, absolutely. What mental game is yeah, I would say so important is a good way of putting it. I would actually say critical. I take it one. I think it's the most important thing. I mean, you can learn technical analysis, you can learn charting, you can learn all the strategies, all the techniques, but if you don't manage your emotions well, nothing else matters. I think it's the most important piece. So that's just me. I mean, some people, like to attach numbers to it and all this other stuff, and it's fine. You got to do all that stuff, right? You got to have a strategy. You got to understand technical analysis. You got to manage your money well, but this is what you got to manage the most. Start here. This is one thing that I've said for a long time. And I used to, in the old days, when I started in 2000, over 20 years ago, it's crazy to even think that. But I remember thinking if I could just eliminate my emotions. And it didn't take me too long to figure out that that was never going to happen. That's like saying, I mean, live without emotion. It's impossible, right? We all have feelings. God gave us emotions for a reason. Fear is there to protect us. The problem is that a lot of us don't necessarily use it to protect us, but it works against us, right? It's a double-edged sword. It was given to us to keep us from getting hurt or killed, right? But a lot of times we give into it in subconscious ways that we don't recognize. So eliminating emotions, yeah, unless you're working. All right, Brenda, we'll look at the cues first. Eliminating emotions is pretty much impossible. And I still see a lot of people out there as, they're promoting themselves as trading coaches and say, you need to learn to trade without emotion. It's not going to happen. Good luck. Can we manage the emotions and rein them in and control them in a healthy way? Yeah, absolutely. And one of the things that I've learned is in swim with the undertow. This takes me back to my childhood, at least my teenage years. I lived out in the country outside of a small little town, and there was a river called River Forks where one main river came down and then it forked. It was like a big T, basically. But there was a huge park there right on the river on where the fork happened. And on the other side of the river, which was closer to our house, there was this huge rock, right? And we loved to go jump off it and swim. Well, the rumor was, at least this is what we were told, I don't know if it's true or not, but there was an undertow in the river, kind of like there is in the ocean, right? And so my parents taught me very early that, look, if you're going to go swim in there, you got to understand if you get caught in that undertow, then you swim with it or you swim perpendicular to it, right? You don't fight it. And that's one of the reasons that if you get caught in an undertow, I mean, obviously if you're in the ocean, which, growing up on the Oregon coast, not on the Oregon coast, but an hour and a half from the Oregon coast, we swam in the ocean quite a bit too, right? And it was one of those things like, if you get caught in an undertow, you swim sideways, right? You don't fight it. And people that, I mean, I've never been caught in one, thank God, but apparently there's stories of people that have survived them and they swim either with it, you either go with the current or you swim perpendicular. If you fight it, you get exhausted and then it's no good. So that's one thing that I was trained that if you're going to swim there, there's an undertow apparently. And if you get caught in it, it's a river, right? So the river, eventually it's going to end anyway. So one of those things, you just got to learn to swim with it. And trading's not really any different. You got to learn to go with the market, right? The old saying that the trend is your friend. You got to learn to swim with it. So you got to let your emotions just go there with it too. So one thing that's also very important, don't trade with scared money. If you're putting money into an account that you need to pay bills with, that's not a good place to be. Years and years ago, I did that for a very short time and it was not wise. You make foolish decisions. You can't think clearly. It's just not a good place to be. You want to be in a position where you can just let the trade do its thing and not be scared, right? If you're scared to lose your money, then trading's possibly not for you. It's one of those things where it's going to happen. I lost 16 bucks this morning. I could care less. It doesn't matter. It's menial. It's almost nothing. It is nothing, basically, in the big scheme of things. It's nothing. Because, you come back and make $300 on another trade in 20 minutes. So what? 16 bucks becomes nothing. If you're on tilt, any poker players in the room? If you're familiar with poker, then, well, that may be one of the reasons that you love trading, if you love poker. Poker and trading are very, very similar. In fact, I would argue they're absolute parallels. There's not a whole lot different between the two. You've got to understand the basics, which if we did a comparison. If you're playing poker and you're starting, say you're the Texas Hold'em's gotten the most popular in the last 10 years, right? Your first two cards are the most important, right? If you get a pair of aces, you're in a strong position. If you go look at Amazon stock and you look at a weekly chart and you recognize there's a beautiful head and shoulders on it, that looks good. I just saw that yesterday. I think it was Wednesday when I was doing the pattern of the week. Amazon has formed a beautiful head and shoulders. And I don't know if I saw some report. I don't know if did they come out with earnings last night? I don't really pay that close attention to Amazon as far as the stock goes. I don't really trade it. I look at it now and then, but that's what I thought. Okay. Because I read an article this morning about how they missed their earnings were off a bunch. They were going to spend billions of dollars to try to work against the Christmas shortage, right? Sorry, my eye's still bugging me, so it looks like I'm crying, but I'm not. And it's still a little bit red, so it's getting better. They've got a beautiful head and shoulders. I don't know, where are they? Are they getting hammered? I meant to look at them actually because I read that pre-market. I'm just curious. Oh, they're only down $100. That's not that big of a deal on $3,500 stock, $3,300. But again, you get into if you're comparing it to poker, your starting hand would be compared to the pattern, right? I'm a patterns guy. So if I find a head and shoulders, I love it. It's my favorite pattern for reversals. So when I saw Amazon, I'm going, that's beautiful. There's a pair of aces right there. Now, it may be a longer term trade, and I'm going to actually look at it. Maybe we will today and see what a long term option might be on it. So we'll see. But one of the things in poker, if you know any poker players, and I've met a couple of professionals and just kind of pick their brain because I like to do the comparison thing, right? I look at, because I spent a lot of time playing poker when I was younger. And I think that's one of the reasons I fell in love with trading. But when I first started playing poker, what happened is, I know many of you have heard this story. I'll keep it short. I got beat on 4 of a kind. I had 4 5s, and this guy it was 7-card stud, and we were just going at it head to head. After these other people were like, he's got 3 queens on the board. I'm like, yeah, so what? They only could see my 2 5s. 2 of them were buried. So I had 4 of a kind, right? It's a monster hand. The odds of me losing are 0.5% maybe. And so we go at it, and then he flips over 4th queen. And he got it on the last card. And I was just stunned. I'm sitting there going, I'm looking at this monster pot. I've convinced myself that I'm going to win. I already know I'm going to win because he's got a full house. He thought I had a full house. This is what my mind was thinking, right? He thought I had a full house because I kept raising him on his 3 queens. And then he gets a 4th queen, and I'm thinking he got his full house, and now he's going at it with me, and I'm going to smoke him with my 4 of a kind, right? And he flips over. I'm just sitting there stunned. I don't know how many of you have seen the movie Rounders, but that's what I look like. And I'm like, what just happened? It's no different than, right, if you ever get into a trade and the stock gaps against you, and you're like, you just have that deer in the headlights look. You're like, what just happened? You know, and you're getting hammered, and you're losing a bunch, and it's like, what? You don't know what to do, right? And your mind just goes crazy. Well, I got up from that poker table. I went to the ATM and I got more cash. And I came back and I sat down. And very, very quickly, guess what I did? That's right. I gave that back too. I lost all that. I was on tilt. In other words, my head just exploded and I went back for more. And it was foolish. And when I got up and left, I was like, okay, I'm not doing it anymore. I got up, and the guy that I went to high school with came, he was sitting at the table too. And he walked outside with me. He goes, yeah, I wanted to say something, but you already sitting down. He goes, you get beat like that, they call it a bad beat, right? You get beat like that, you get up and walk away because there's no way you can keep your head clear. And trading is no different. I utilize that memory from that game, which was almost 30 years ago now. It was at least, that was about 25, 26 years ago. And I remember it like it was yesterday. And I utilize that memory and that understanding that when you're on tilt, if you are emotionally raw and you just got beat up on something, get out of the market. Don't trade. If you have trades on still, then just manage them the best you can. If you're completely flat and you don't have anything on, just get out. And just clear your head. However long it takes. It might take a day or two. It might take a week or two, maybe a month or two. But whatever you do, if you are in a place where you can't manage it, then stay out. Okay. That makes sense, I hope. So paradigm shift. And this is, I know it's easy, especially when we come to the market. We first get started. I remember, even though it's been more than 20 years ago, I remember looking at the market going, man, I'm going to make a fortune. I'm going to get really good at this. I'm going to make a fortune. And you get excited. And a lot of times we only see one side of the coin, right? We don't flip it over and look at both sides. Not only do we have to learn to see both sides and look at the risk we're taking, I think that's even more important, because we come in with rose-colored glasses and, you know, we're showing how much we can make, and that's good. It's not that it's bad. It's not that it's not possible. It's that we get stuck on that and we say, I'm going to take my $2,000 to $3 million in the next 3 years, whatever the number is, right? And you start fantasizing about what your life would be like. And we don't necessarily account for the risk. Whereas once you've traded for a while and you get, you start to realize that seeing the risk is more important. I think it's more important to pay attention to the risk and manage the risk first. But there's always two sides of the coin, right? And losing trades, losing $16 is part of the deal. It's no big deal. In the big scheme of things, losing trades are no big deal. They're going to happen. In fact, if you're doing it right, they're probably going to happen more often than the winning trades. And you'll still come out ahead. That's the beauty of risk reward. But we got to learn to look at both sides of the coin and recognize that a loss is no big deal. When a professional baseball player steps up to the plate and he strikes out, does he get all mad and upset? No, he just walks back to the dugout because he knows it's part of the deal, right? It's part of the game. You're going to strike out. You're going to walk. You're going to hit singles. You're going to hit doubles. And once in a while, you get a home run. And that's another thing that I try to utilize a lot of these analogies just in my own to keep my own mental game straight. So like with this one, you know, I got an accidental, lost $16. I don't care. It wasn't even a strikeout. I swung for a single. I didn't even strike out. I don't know what happened, but it doesn't matter. In the big scheme of things, it doesn't matter. How you like that heading? That'll freak you out, right? Self-destructive behaviors. What's that? And this kind of goes to what I was just saying, is that the market has the potential to fulfill every dream you had possibly, right? And most of you are here to make money, right? Because you want to better your financial life, financial freedom, whatever it is that you're chasing. Okay. And the market obviously has the potential to do that. And I don't know why I just thought that, but I just saw another article the other day, the Shibu, right? If you want to become a billionaire, you go find the right coin and buy a bunch of it before it gets big. I just read a couple of days ago, there was an article about somebody in one of their Shibu bought $8,000 worth of Shibu, that Shibu coin, in August of last year. So 13, 14 months ago. Apparently now it's worth $5.7 billion. That's insanity, is what it is. It's a 60 million% rate of return. Yeah, that's what I said too, Brenda. It's like, wait a minute, did I read that right? Yes, somebody bought $8,000 of Shiba Inu coin, which is another one of those meme coins, right? When it was like 8/1 billionth of a penny or something like that. And apparently it's now worth $5.7 billion. It's insanity. I don't comprehend the whole Bitcoin thing. I mean, I get it kind of conceptually, but yeah, it is crazy. Crazy is an understatement, I think. But yeah, it's insane, I think. It's like, how do you, I mean, can you just imagine that? But that's kind of what I'm getting at here, though, too. It's like Tesla at 22, yeah, or Amazon at 15, or Microsoft back in the day, or except that it was done in a year's time, which is insanity. It's pure insanity. But that's what a lot of people are chasing. And I can't admit, I mean, just like what I'm talking, that's why it came up. I mean, we sit, and you're probably all doing it right now. I guarantee you're sitting there fantasizing right now. It's like, man, if I would have just put $8,000, I'd have $5 billion. You know what I can do with $5 billion? It's hard to even fathom. And many of you are sitting there right now thinking about it, right? And it's easy to do that in the market. And it's also important to balance that out. and realize, okay, because that is one of the biggest things. And I just caught myself a couple of weeks ago day trading where I was cranky and upset that I missed one big trade. And actually I missed one. Yeah, I miss them all the time, right? You're going to miss trades all the time. I missed a trade. And then because I was cranky and upset, I jumped into another trade that I probably shouldn't have gotten into. I was going to wait a little bit on it. But I realized after I took a stop on that, and it was a good trade because I got out, I traded my plan. I had a plan getting in and I followed the plan. So that part was good. But after the fact, I realized that I pulled the trigger on that trade earlier than I was going to because I was cranky that I missed the other one. So you've all heard of revenge trading, right? I think I'm probably getting ahead of myself here, but yeah, I was. And a lot of times we talk about it in reference to getting our money back from that particular stock, right? You go back and trade that stock. Well, I just caught myself going, wait a minute. I just got into this other trade. It was a totally different stock. I missed a monster trade on one stock. And so I placed a trade on another stock that I probably shouldn't have because I was cranky that I missed that one. And it's funny how when you step back and you reflect back on, particular trades, especially if it goes against you. And I always do very quickly is I look, did I make a mistake there? Did I do something stupid? Or was that just a trade that just went against me? Like Oxy this morning. It was only a couple hundred shares. It was just the starting position, threw a stop in, and now it doesn't matter. But it didn't bother me. So revenge trading is where you're trying to get money back because you had a trade go against you. You lost money on this particular stock and you want to go get it. Well, if you lose money on any stock or if you miss out on something, that's the flip side of that coin, right? If you miss a trade, if you miss out on an opportunity, you can get cranky. You can find yourself getting upset and placing trades that you shouldn't be in. Because again, you're maybe not on tilt, but your emotions are raw and you're upset that you missed one. So you get into another trying to make up for it, right? Oh, Sarah, that's an awesome comment. You know who else is fantasizing about that right now? Uncle Sam. Sarah says, I tend to fantasize with the unrealized profit I show. Exactly. And it's a great point. And we all do that, right? That's a normal. You're not abnormal. You're very normal. That's what happens, right? I do the same thing. We all do. And that's the emotional control, the managing your emotions that you have to fight against. Because even when I do a day trade, I get into it, it takes off, it starts going, okay, I'm up $100. If this thing goes and hits my target, I'm going to be up $1,000. And before it even gets there. And the next thing you know, you're making stupid decisions because you have this $1,000 marker in your mind. And then it goes from 100, you're up 200, and you're like, I should take some profit. No, I'm going for 1,000. And then all of a sudden it turns real quick and your $200 profit goes to negative 100. And now you're beating yourself. Okay, if I can just get back to break even, and then you're down 300, then you're down 500. And now you went from being up a little bit. You could have taken half your profit out, banked some profit, and then protected your downside. And instead you went from being up a couple hundred, would have been at least a small profit or at least a break even. Now you're down 500 because you got into that, exactly what you said, Sarah, is fantasizing about here's the profit coming. You get in that, and it's one of those things, again, you just have to manage it. You just have to keep yourself in check. And it is one of the most challenging things. So there's the big thing is you've got to, and that's, and I'm glad you said that. The big thing conceptually, I guess the main message of this today is to make sure that you don't let those thoughts and those emotional reactions that we all have distort your decision-making process. That is one reason that we talk about having a plan, having rules set in place, and making sure you follow the rules. And even that is easy to break the rules, right? Even if there are your own rules, you got to make them up yourself. And there's nobody there. There's no boss sitting over your shoulder and going, you broke the rules. There's nobody there to do that. You got to do it yourself. And that's where discipline comes in. And it's definitely a challenge. So oh, you did on end tap, but it's working. That's, you know what, that happens. And that's a good point too. And that's the hard part, right? Is that sometimes you give into the emotional side and you do it and it works out. And that is good and bad. It's good that it's working out in the short term, but from a long-term emotional perspective, you got to remember that that's sometimes you get the anomalies, right? It's just a little thing too. Is physically, if you are physically wiped out, because it affects our mind, right? And I can tell that I've finally got back into working out consistently. I can always tell on days that I skip out or I miss out. I mean, there's some resting days, but if I haven't worked out in a day, I can tell, and my mind isn't as clear, especially as I get older. My mind's not, I wouldn't say I'm slowing down, but I can tell a difference when I'm not physically, when I don't eat well. There are days, especially on weekends when I have my kids. So a lot of times I'll smoke a brisket or I make a lot of food, right? And we just kind of go hog wild, bacon and eggs in the morning, hash browns. I don't eat that healthy. So, and I can feel it now. You know, when I was younger, I mean, my son eats sugar like I did when I was a kid. It didn't affect me. Now, as I'm getting older, it's affecting me. But this is important to keep your mental state, keep your mental state there. And it's, I think, if I remember seeing it, Rob just recently did a something. I don't know if it was a video or what, but I remember seeing something in the email about your posture and your trading. I remember seeing the picture of him all slumped back in his chair. And it does affect how you think. So you got to make sure you're doing what you have to keep your mind clear and be able to think and keep good decisions, if you will. So lastly, and then we'll go look at the Qs and some other charts. We'll look at Amazon too. So if you have stocks, if you have tickers you want to look at, just let me know. These are two things that I have found have been a massive game changer for me from an emotional and mental perspective. Okay. Utilizing risk reward is massive. I think it's probably the most important thing. And if you haven't seen why, well, let's put it this way. I'm just going to, where'd it go? Did I shut it down? No, there it is. Okay. I'm just going to shamefully plug this right now. Where'd it go? Go to the bonus videos if you haven't done this and watch this, because here's what, and I'll give you just the math visually if you can't see it. Risk reward. That video right there, I go into, I think it's 8 or 10 or 15 minutes about risk reward and why it's so important and so critical. But if you think about, well, thank you, Amy. If you have 3 to 1, in other words, for each, if you put on a trade, you have $1 risk, you have to have at least $3 of upside. Okay. So again, I'm going to give you just the quick version. So if you do 4 trades, can you see my fingers? 4 trades. You lose money on 3 of them. You make money on 1. If you lose $1 on 3 trades, how much have you lost? $300. You make $300 on 1 trade. How much have you made? $300. You've broken even, right? You have 0. Yet out of 4 trades, you only made money on 1. That's 25%. Your batting average is 250. You were right once, wrong 3 times. You were 25% accurate, yet you're break even. Hence the reason there's the old saying that says, let profits run and cut your losers short. Because one big win can make up for a whole bunch of little losers. And what do most people do when they start trading? The opposite. Anybody here ever said, man, if I just did the opposite of what I was thinking, of what I actually did, I'd be making a fortune? Many times, right? Yeah, Barry, I get it. I don't know. That's just the way everybody's always referred to it. So, and that's, I know that's a cheesy answer. It's not a great answer, but that's just the way we've always referred to it. $3 of upside for each $1 of risk, however you want to slice it. I don't know. Yeah, and I get what you're saying. And I've had that thought many times, but I'm not about to go out and try to change everybody's mind on how they do that. One thing I will say though, because that brings up, because I love the way you're thinking, and that's a good thing. There is one thing that I have heard a few times lately that irritates the heck out of me. And there is one myth that I definitely will work to squash and change. How many of you have ever heard that 80 to 90% of options expire worthless? Anybody ever heard that? I'm out of coffee. I got 25 more minutes before I can get more coffee. How many of you believe that that's true or not? 80 to 90% of options expire worthless. A lot of people have heard that, right? Well, for those of you that don't know, it is not true. That would be the hope, right? I have for years and years heard that myth perpetuating, and it frustrates me because it's not even close to true. Why is it not true? Well, first of all, let's just, okay. So you, Brenda, I'm assuming you've heard that. And I don't know if you, it doesn't matter if you believe it or not. I really don't care. Here's the thing, it's not true. And first of all, just think about it from a common sense perspective. Here's an option chain, right? Just think about this from a common sense perspective. This is just one option chain of December's, right? This is, I don't know what, ABBV. Stock's at 115, right? So the stock's right here, that it's basically right in the middle of the option chain. When this stock closes, let's just say that it closes at 115 on December's expiration. How many of the puts are out of the money and how many of the calls are out of the money? It's half and half, right? It's 50-50. Half the calls are out of the money, half the puts are out of the money, no matter which side of the chain you look at. So how could it make any sense that 80 to 90% are going to expire worthless when 50% of the chain on both sides of the chain are out of the money? If you can't tell, I get a little cranky about this. And here's why, because years and years ago, this is probably 2007, 2008. We were doing a workshop. One of the freebies, right? One of the 2-hour ones you go to preview and see if you want to go to the big one. And a gentleman by the name of Gene came. I remember his name. And I went and talked to him. It was our early, we did 2 sessions a day, right? It was early one. He came and I talked to him and he said, yeah, I really want to do this. But he said, he was very open and honest. He said, I was in a car accident 25 years ago and it messed my brain up. And he goes, I can't think. It's hard for me to make decisions. He was well aware that his cognitive ability had been severely hampered from this car accident. So he didn't make big decisions like that by himself. He always brought in a friend or a trusted source. So he said, I'm going to come back tonight with my friend. So he comes back with his friend. He said his friend had gone through a different company's course. He comes back that night with his friend. They sit there. At the end, I go up to him and he says, give us a few minutes to talk about it. So his friend calls me back in after about 5 minutes. He says, okay, answer me this question. Okay, now he's testing me. And I already knew he was. He said, 80 to 90% of options expire worthless. I said, no, that's false. Well, oh my gosh, he freaks out. Gene, let's get out of here. These guys don't know what they're talking about. And I've been thinking back, I laugh because I said, excuse me, sir, have you ever heard of Larry McMillan? He said, no. Well, I said, well, he's pretty much the options guru who started trading listed options in 1972 when it came out. He's written 2 books about it. In fact, on page 21 of his book, McMillan on Options, he explains that this is a myth. And he's kind of sitting there stunned. I can see the look on his face. It's like, I said, would you like to see it? And I just happened to have the book with me. And it's kind of funny how it all played out because I was rereading it and I literally just highlighted on the plane going to that city. And it was on page 21 and highlighted how this was a myth. And so I grabbed the book, I brought it to him and I flipped it open and showed him McMillan did this. Not only that, but he said in the book that he kept his own data for 4 or 5 years of how many options expired worthless. And I had actually emailed McMillan because he's got a website. And he sent me the spreadsheet. I don't know if it's him personally or one of his people, but they sent me the spreadsheet of all the data that he kept. I think I have it. And let's see. I think, is that it? Yeah, that is it. So it was really interesting though. So, and ever since that incident, because this guy, all of a sudden, he spent like 15 grand trading with this other company. And a lot of people promote selling puts or selling options because of this myth that 80 to 90% expire worthless. If you want the odds on your side, you got to sell options because 80 to 90% expire worthless. Isn't that the side you want to be on? It's not true. So anytime I hear somebody say that, it makes me second guess. It's like, okay, you really know what you're talking about. And people continue to perpetuate this myth. And as you can tell, again, I get fired up. So here's a spreadsheet that McMillan sent me. So this was November 99 is when he started keeping the data, and he kept it all the way to July of 05. And you can see there's in the money. And this is where it maybe gets tricky. And I don't know if that's, I think that's open interest. I don't know. And this is the hard part about mathematics, right? And accounting. You can kind of manipulate numbers to a certain degree, because you could go in and say, okay, well, and again, I know I'm a little off track of the topic, but you can go in and say, well, here's all the options, the open interest, and you could skew the numbers and say, well, 80 to 90% because of the open interest. But you really couldn't even do that, I don't think, because in reality, it's still the same. You got 50-50, right? But here's the actual data. So the options that have percent with value at the end of expiration, and that's what this right column is, and then the worthless ones, you look down at the bottom, in the money options were, well, it was 4,300. The worthless options were 3,242. The percent of options that had value was 57.2%. So it's actually less than half of options expire worthless. And then he estimates, if I remember right, he estimates that about 10% of options get closed before exercising. In other words, if you're in the money and you've got intrinsic value there, some people just sell the options. So the number is actually closer to 60 or 65% is what the estimate is. But regardless of what that number is, the reality is that myth that 80 to 98% of options expire worthless is just not true. And when you think about it, again, when you look at the option chain, having 50-50, it doesn't even pass the common sense test. And then there's actual data for 5 years showing that it's not true. Oh yeah, Brenda, amen. It's, you know what, that's the thing. It's not, don't beat yourself up, because it's, yeah. You want me to tell you how I really feel? It's, that is, again, I know I went a little sideways on that, but, the Barry's comment got me off on that tangent. I just saw it again recently. That's why it was kind of top of mind. I hadn't thought about it for a long time, but, yeah, so it's kind of, you can call it a Barry. That's kind of a semantics argument, but again, that's one I definitely won't fight. But I will fight the myth that options expire worthless. So anyway, let's get back on topic of scaling. So the 3-to-1 or 1-to-3, as Barry was making the point that it should be 1-to-3 risk to reward, because it is backwards. The verbiage and the numbers are actually flip flopped. So. Yeah, and it doesn't make sense to those of us that are logical, but I'm guessing you're an engineer, Barry. I'm just guessing, but I think the same way. So I'm very detail oriented like that. But one of the things, especially with trading, is that I do it despite you guys from a mile away, partly because I think the same way, like I said. So it's very detail oriented, right? And making sure that every little tiny, millimeter is accounted for. So I get it. You were probably the one when I was on stage in Vegas that said, no, that's not a rising 3, that's a mat hold. I don't know if it was or not, but one thing I've learned is some of the nuances really, I don't make big deals out of them anymore. So you'll have to work the engineering mindset and massage it to where, because, and here's one maybe you've heard, maybe you haven't, Barry, but when it comes to drawing like support and resistance line, draw it with a crayon, not a pencil. So you have to go back to your childhood and get a box of Crayola, because the engineers like it's right down to the penny for a support line, and it's just not. There's a little bit of a range. So, and then scaling is another one that I use that dramatically helps. That's one thing I did this morning. This trade I pulled the trigger on, I only took 20% of a full-size position because it was a little bit early. I knew that, you know what, it could, and I missed one yesterday that I should have gotten in. I was watching it for a little bit. I should have pulled the trigger on just a small position, and I didn't. I just thought I'll watch it for a little bit, and then it took off, and I missed it. So this morning, I put on 20% of a position, just left it there. I got it a little bit early. I scaled in just a small position, got it a little bit earlier than the actual entry point, put a stop on there. I put a trigger up on the other side, and I lost 16 bucks because I only had part of the position. I would have lost 5-6 times that if I'd have done full position. So there we go. Yeah, let's get back to it. Anyway, hopefully any of you that maybe have heard that myth about options now are straight on it. So, because I love to try to squish that one. So, all right, Brenda, let's do it. Qs. I'm going to clean that all out. Probably should leave it on there, but so this is just a picture of the NASDAQ essentially. Really? Is the NASDAQ finally breaking out? Oh, it did yesterday. Okay. I was like, wait a minute. I thought I looked at the NASDAQ just a day or two ago. You're only up 920,000 on your Qs? Yeah, that's your practice money. Okay. How much are you doing? How much are you trading with in your practice account? 920,000. You're up $1 million today. No, it's okay. I believe you. It's just practice. Who brags about practice trading? I'm just kidding. We all do, right? I don't care what trade it is. Trade's a trade, right? Well, I mean, obviously you can see, I mean, the markets are still bullish. We've broken out to new highs. Kind of hard sometimes to get a good solid trend line on here, but try to catch as many bottoms as possible. Yeah, I know. Isn't that weird? Because I mean, the other day, because well, you saw, if you all saw Intel's earnings, Intel got hammered. They were down 6 or 7 points. I mean, they're down like 20%. And Intel's a big part. Well, they're probably not as big a part anymore, but Intel used to be a huge part of the NASDAQ, and the NASDAQ was up even though Intel was getting hammered. So, I mean, I don't know what to tell you on the Qs other than the fact that it's broken out to a new high, obviously, and we're up. Yeah, we're up a little bit right now. We're up 6 points on the NASDAQ, which is almost nothing, but it's run a bunch. I mean, I would expect it to at least settle in here a little bit. I don't know how much further it has to go to run before it has some kind of pullback. But so yeah, I mean, if you're making money on it, that's awesome. But I mean, I don't see there's no patterns, there's nothing here other than just a good solid trend and a breakout to a new high. So Cisco head and shoulders, yes, it was. As you can see, this was all still sitting there. It's a miniature little head and shoulders. It's not the best one I've ever seen, but I mean, it's a little left shoulder, a little head shoulder. I prefer to see a bigger, more defined shoulders. So than this, but yeah, the pattern's definitely there. As long as it stays below that level right there, if it drops back down here, it's kind of got this little dance going on. So I'm not terribly excited about it anymore because it's rallied back up above the neckline. It's kind of just sitting here. But if it made a good move, if the market itself turned over and this started to drop, then I'd possibly be interested. It depends on what the action is. I'd say it's going to take at least a day or two, if not a week or two, before it gets back down to this entry level. So it's kind of, Cisco's kind of on the back burner right now, as far as, you know, any kind of trade potential. But let me show you. Y'all see that? Now you see it. Okay, here's the weekly chart. Actually makes it really, really nice. This is a beautiful head and shoulders. And I didn't even do a measure move. I just saw it the other day real quick. I think. Yeah, and if you all have tickers, we got about 10 minutes left. We can take a look at something. If you want me to look at it, analyze it, see any patterns, any questions about anything that's come up, or anything you want, send a question. So it's about $500 of potential if it breaks. Of course, there's going to be a lot of support there, about 29.50. Actually, I'm going to put that right at 3,000. Actually, got a couple little blips there, but that's if it breaks that level, then 3,000 is the next. But the head and shoulders actually would show coming down to about 26.84. So there's a daily chart. That's maybe a little bit short, but that's okay. And it's down. What was it at right now? 33.45. So it's basically at that spot right there. But yeah, I mean, this thing, and on a daily chart, obviously you got to, oh, come on. I'm going to delete that thing. I don't know why it does that. It's gotten harder to adjust these for some reason. Actually, there's a better, that's a better neckline. I'm going to start over with that. $560. So if it breaks the neckline, again, that's if, about 2,600 actually. It's a nice round number, 2,600. But again, this is one of those that would be it obviously has to break that neckline, and that would most likely be a while before it does that. So this is one I'll keep on the radar, keep an eye on it. I think longer term, maybe into next year, depending on what happens, you know, with especially the Christmas season. You know, we'll see how the Christmas season affects and how all this other stuff affects things and how inflation, I mean, all that. The big economic picture is not necessarily spectacular right now. It's a little bit of a surprise to see the market continue to rally, considering there's so much fear out there right now. Car, yeah, this thing's still going, huh? This came up, was it last? Yeah, it was last week. Somebody brought this up. It's like, what do you do with this thing? It looks like Shiba Inu, right? You can't, I mean, how do you look at this thing? It's on a stinking tear. I mean, it went from 90 to 170. Is that a couple months? I mean, is there the first question, is there a catalyst for this thing to keep going or not? And if there is, how much further could it go? I mean, this thing's doubled, literally doubled in a month and a half, 2 months. And we're talking about a rental car company. I mean, I'm not a fundamentalist, but just thinking about it from a fundamental standpoint, are they worth this? Are they worth $170 a share? And I mean, is this just a temporary thing where their profits have gone up because used cars, from what I heard, I read an article a couple months, 2 or 3 months ago, 4 months ago, that they were selling off all their used cars, or a lot of them. They didn't have the business, so they sold a bunch of them. Used cars are up in value because the demand and supply is short. So is this just a short-term thing where, you know, they banked a lot of extra profits because of the situation, but then they're going to go back to normal once things, you know, settle back into relative normal? They can't sell off all their cars, then they have no cars to rent, right? I don't know. It's just, I mean, I don't look at the news or fundamental stuff very often unless I really feel the need. But I mean, a rental car company, it just seems, if you look at the bigger picture, I mean, this thing from 2010 was down at $10. It ran up to upwards of 60 and then dropped back down to 10. I think is that the COVID? No, that's not even the COVID crash. I mean, for a decade, this thing's, it basically has changed hands between 20 and 40 or 50. Are they worth $170? It looks crazy. Yeah, I mean, scary is one way to put it. That's what I would say too. It's like, how much further can this thing go? So, I mean, from a bullish standpoint, I would be extremely cautious. Is it beginning to start a flag? Possibly. Need another several days to play out, because right now there's no flag on it yet. But if it just goes sideways for the next few days, then yeah, you'll probably get a flag or a pennant type of pattern. So, you think Avis will follow Hertz in buying Teslas? I would imagine. I mean, if Hertz is successful with it, then obviously they would. I think that's the big caveat. But you know, I never thought about that. I wonder if is that why Tesla's going crazy, but I can't imagine. I mean, them buying Teslas is going to do it. I think this is a result of oil prices. I think Tesla is going to get more and more business, obviously, because people are going electric. But at the same time, electric prices are going higher. Are they not? I mean, everything's going up. So this is not a massive surprise with all the run up of that. But there's the other thing too. The more Teslas people buy, the more electric energy is going to be. Energy is energy, right? You got to get it from somewhere. So if more people buy Teslas and they're plugging it in their house, then now there's going to be a shortage of electricity, or whatever it comes, which drives the demand for that up, right? So then the prices of electricity go up because more people own Teslas. They're all over here in Seattle area. They're actually, what's the their competition is I can't remember the name of it. Drawing a blank. I want to say, is it NIO? Or there's another one that's it's a Tesla essentially. They're building a showroom right in South Seattle in Soto. I just drove by it a couple of months ago. I mean, what is that? And I realized, oh, that's that company. Lucid, thank you. Yeah, they're building a thing right down. There's a Mercedes, a Honda dealership, or Toyota Honda. There's a Mercedes, and this is just South Seattle, and just about a mile south of that, right on this corner. It's kind of a small lot, but but I think that will keep that going. But again, prices are going up on everything. So when would I short that? Great question. I would short it when there was some kind of pattern or good indication that the run was over. We've got a dark cloud cover there. Now, let me make this bigger for you. There's a dark cloud cover right there on that day. Not massive volume, so definitely not too excited about. The bears are not super excited about getting this thing out. There's earnings coming up. That's Monday, it looks like. I don't know, where's it at right now? Just noticed we only got a few minutes left. Whoops. Up a bunch today or not? That's down $1.50. I would short it when there was some good pattern, some good indication that the run was over. So that makes sense. I know it's a very generic answer, but I mean, as far as giving a price right now, there's no indication except for, I mean, you could say the high of 180. If it runs back up to 180 and hits that spot, not only is it a round number and then it rolls over, I would probably place a hook, just a small one, because there's a lot of momentum in this thing, right? And with, the plethora of day traders out there, all these retail traders that get all excited about these things. Oh, look, it's run. Let's get in. And then they jump in and it pushes it higher. If it runs back up to 180 and rolls over, I'd put a hook right below 180 as a double top. I know it doesn't. This is yesterday's chart. So yeah, it doesn't have today's. I know we're open right now in the market, so it's not. Today's the 29th, right? Okay, good. I thought I was losing my mind. So yeah, it's down. That's why I was just bringing it up on. You can see I have my trading machine back here. I don't know if you can see it or not, but I have a dedicated trading machine over here on my right. That's what I'm looking at. So, of course, I forgot. I do have. I had my toss running over here. I could have looked over here, but I got it over here. Yeah, it's down $1.89 right now. So, yeah, I would look for some good solid indication there. So, Brandon, I don't know if you have patterns in Flash. There's a way, if you need to email me some, send it to support, or if you are still subscribing to patterns in Flash, then send it through there's a, what do you call it? And then let's see, it's on the Flash card, I think. Let that go. Price per mile for a Tesla is super cheap. If you're talking fuel, yeah, send a message through here. So if you have a subscription to Patterns in Flash, you can send a message this way, and that'll come directly to me. I'll get an email that says you have a message. So, or send it, or if you don't have that still, then just send it to support and they'll forward it on to me. So, who bought the Teslas for rentals? Apparently, Hertz did, is what it sounds like. Which I mean, they're a rental car company. If the dollars and cents makes sense, then why not, right? Well, there's the interesting part about it. You say the price per mile for Tesla is super cheap compared to what, though? That's the tricky question. Is You know, I mean, if you're paying $100,000 for a car compared to paying, you know, 30 or 40,000 for a car, if you factor that in, and then maintenance. I mean, when a Tesla battery dies, how much does that cost? I mean, I know Priuses are 4,500 if you take it to the dealership. I talk to people that have Priuses, like $4,500 to replace the battery. Aftermarket is 1,500 to have just a regular shop, just to get the battery redone, refurbed. So electric cars are great in the short term, but long term, what's the ultimate cost? I mean, when you factor in the cost to replace a battery or to recharge it or whatever it takes to redo the batteries, I think that's something that most people either aren't looking at or aren't considering. I mean, yeah, you don't have to put fuel in it, you just plug it in. But solar power shelves for less than unit price. I'm not sure I followed you there on that one, Will, but agreed, Barry. I mean, I think, yeah, we've got, I think we've got plenty of energy sources. It's a question of, are we tapping them to the full extent that we can? I think it's got to be a mix of everything. So, I mean, in my opinion, so I don't think I mean, energy is energy. We need it. So you got to produce it any way possible, as far as I'm concerned. So, oh yeah, send it, Brent. I'd love to see it. That was a question I was thinking too, Alan. Maybe I saw that subconsciously, but would they gouge you if you return it less than a full charge? It'd be interesting to see how much are they going to charge for that. I'd imagine probably not. So, yeah, I don't know. I know, and I rented a car a couple of months ago. I think it was Enterprise, and they got me. They came up with a brilliant sales tactic. He goes, "Well, do you want to just prepay for the fuel?" I mean, it was almost on empty, right? He said there's like 3.5 gallons of fuel in there, is what they estimated. You want to just prepay? It was like $10. You want to prepay for it, then you don't have to fill it and bring it back. And then as I was returning, I was like, wait a minute. Even if I take it back on empty, then I'm still paying for, even if I leave 1 gallon of fuel in there, I'm still paying for a gallon of fuel that's in there. So they got this brilliant strategy now where they're collecting $10 for me, and they'll leave it to the next person and say, do you want to just fill it up? You want to just bring it back empty? And then they'll take $10 from them. I got taken. I was like cranky. I was like, I should have just taken it back on what the fuel level was. It would have cost me probably $5, but anyway, it was $10. I didn't care. Oh, interesting. Yeah, see, Barry, you know a lot more about that. I don't know if you're in that industry or not, but he says old car batteries are being recycled for use as batteries for solar homes. Or on battery for a car is still good when size and weight are no problem. Interesting. Yeah, I don't know that much about that stuff, and I haven't really dug into the technology. So, yeah, I just learned that lesson. So anyway, any other real quick questions? I just noticed we're a few minutes over. So, and if you haven't experienced patterns of flash, go take it. There's a link here in the chat box somewhere, and I'm sure Amy's going to pop one in there here in just a second. Again, I would say take the 2-week trial, take the quizzes first. If you haven't seen risk reward, go into the bonus videos, check out some of the patterns of the week. The calculator, this is for 3-to-1. Thank you, Amy. There it is in the chat box. If you haven't utilized 3-to-1, there's a little calculator you can use. So you put in your stop, right? You put in your target, and then it'll spit out an entry point. If your stop's at, say, $19 and your target's 23, your entry point's 20. So you got $1 of potential risk, $3 of potential upside. It's just a simple little calculator. It just does the math for you. So I know Will says he pays for the course every week, which is about right. The pattern of the week is I don't know how many of them have hit. I went back and did that a couple months ago, and out of all the ones that triggered and went and hit the target and stopped out and all that stuff, it was $100 worth of profit is what it was per share, whatever. I just did a generic number. So, but again, go in and take advantage of the free trial on this. Check it out. Send me a message. Say hi. Introduce yourself, and then next Wednesday night. It should be next Wednesday, I think it was, right? We'll be doing that, the class for subscribers. So you'll be able to get at least one free, or is it 2 weeks? No, it's next week. Yeah, next week on the 3rd. Yeah, next Wednesday night. I'll do the patterns of flash class. So that 1 hour again to go do what we do. So but you find your own patterns. That's because you use the flashcards and you can recognize them, all right? So I'll sign off now. Y'all have seen this, right? Y'all know that trading is challenging, is it not? And this is one thing. I mean, temporary defeat is not permanent failure. It's only if you quit. If you're going to fail at one thing, fail at quitting. Yes, happy Halloween. Y'all take care. God bless. We'll see you on the next time. Bye-bye.